Several big calls on the street today. Let's start with Jim. I want to go to you because we got Boeing and Raytheon, both added to Goldman's conviction buy list. You own both, so they've been on your conviction buy list for a long time.
Thanks, Scott. Probably wrongly so. I mean, let's take the more electric of the two, which is Boeing, right? That's the hot button name. At this point, Boeing's off 60% from where it was a year ago, which means that now you're getting the company for the value of the defense business and basically assigning zero value to the commercial business. Maybe that's right. I mean, certainly I think for the next year, the commercial business is an albatross, but at some point a vaccine comes in or treatment or something that gets flying going again. And so you've got a call option at the current price. You've got a zero premium call option on the commercial business, and you're getting the defense business at a decent price. I like Boeing here. And basically, it's the same argument with Raytheon, but it's just easier to describe Boeing.
Yeah, but, look, let's be clear, right? Don't you want to own Boeing for the long term for the commercial aviation business, right? You're not making a big overarching buy case on
that's
its
the upside
defense business. What's not the upside? It's the most important side.
But look, the question is, what's the downside from here? I mean, look, the downside is there could be liabilities that are unexpected that come from the commercial side. But the upside, you are correct, Scott, comes from the commercial business. On that note, the 737 MAX, we're not talking about it very much, but it has been flying with regulators. It looks like it's going to get back into service beginning of next year. But what you really need for the commercial business is some treatment, at least treatment, if not vaccine, of the virus.
Flyers, travelers,
early next year,
business travelers. Steve Weiss, you wouldn't touch Boeing here.
No, so I've got a great buy idea for you, Jim. I've got this company where all of their customers are insolvent and may go bankrupt if they don't get bailouts.
Stop it, Steve. I just told you you're getting the commercial business
let me finish, Jim.
For zero.
Let me finish. Where one of their largest end markets, China, is talking about putting them on the suspect list, the unreliable list, and where their most profitable customer business isn't going to fly even when you get a vaccine, because they can save the cost and save the trouble by working from their offices, which people are becoming accustomed to. So I don't know where the buy thesis is for Boeing. Oh, and let me throw in management has distinguished themselves as being particularly poor at navigating both the MAX crisis and the virus. So no, not for me. Sorry.
Steve, you totally ignored the argument. And I love you, and we love to mix it up, but you totally ignored the argument. The value of the commercial business in the stock right now is zero, okay? There's only one direction it can go, which is up. That's the upside case. The defense business gives you the floor. I get it. You don't want to buy it, and we like to mix it up. That's fine. But don't ignore the argument that I just put out.
He didn't ignore it. He just gave no credence to it.
Right, and Jim, don't forget, they put a lot more debt in that company. Well, but they put a lot more debt in the company. So that old argument that you're not paying anything for the defense business isn't true anymore, because they're leveraging those cash flows that they need to repay the debt from the defense business.
Steve, the stock's off 60% from a year ago. Don't buy it if you don't want to, but I'm telling you why I own it today.
Bryn?
Jim, it's our love. Yep. It's our love for each other. I'm trying to save you additional pain.
As much as America wants to hear more from the two of you, because it's so stimulating, I want to go to Bryn on Boeing. What's the right play here, Bryn?
Yeah. Well, I mean, I think Jim and Steve both bring up great points. I do think Jim, though, having that call option on flights is really important. And I mean, Goldman Sachs has very credible research. It's on their, once again, highest conviction list. You have either one of the greatest opportunities to buy a really important company that's globally, that to Jim's point's down 60% over the last year. I think it comes down to management and everyone feeling confident that the right management is in place, and you don't have another GE scenario. But I'll say this, though. I've been on a plane every week for the past 6 weeks. There are a lot of people in the airports, and people are flying, and I don't buy that everyone's going to go back to this Zoom world and do Zoom video calls. It's just like so much is left out of conversation. There's nothing, there's nothing spontaneous that happens. And when I go to the airports, everyone's wearing a mask. Everyone wears the mask on a plane. And if you look at Southwest, you know, Southwest is a very credible airline. They're going to be, you know, a huge buyer of the 737 MAX. And so I think I'm going to lean more to Jim and say this is a good opportunity to hold your breath. Once again, hold your nose and buy Boeing.
Didn't you sell Southwest?
Well, I traded it. So it's interesting. I mean, it's down. I sold it at 42 last week. And so I may buy it back. I mean, if it gets into like, it's almost at 36 right now. I may just buy it right back.
37.57. I don't know if you have a return where you can actually see it in real time right here. It's 37.61. 37.60. We'll call it.
I'm a huge Gary Kelly fan. I mean, obviously they're based in Dallas. I live in Houston. They're a wonderfully run airline. Those airlines have full people. The middle row is empty towards October 31st at least. And I think at the end of the day, Southwest will pick up market share from the other airlines. And so I've traded it twice. Definitely, if it gets a little bit weaker, I'll get right back in because I do think ultimately it will go above that 42, 43 level. And so I'm definitely happy to step back in if it gets a point or two lower.
Okay. Let's talk about Dunkin brands for a second. Upgraded to overweight at Piper. The target goes to 89 from 66. Joe, you used to own it. Jim, you own Starbucks instead. Joe, I go to you, though, since you have prior ownership with it, having sold it in August.
Yeah, and purchasing Starbucks, so I'm with Jimmy on that one. I think Starbucks is the better trade. The last quarter for Dunkin was incredibly disappointing, and they're going to have to come back with some quality quarters in the future to reattract investors. I read the note. A lot of it obviously is related to what we all thought would be the fundamental momentum for Dunkin in prior quarters. But the reality of that last earnings report, it did not come to fruition. And until it does, I don't think you step in and buy it. You stay with Starbucks.
All right, good stuff.